Okay, hiya guys. So what we're going to be talking about is money management. And when we talk about this, we're essentially, as traders, what we want to do is minimize the amount we're going to lose when we place a trade. So you always want to keep in mind how much you're risking to how much your reward back will be. So it's called the risk reward ratio. This is more or less used in Forex. So just to give you an example, say I was to enter this trade, we'll have a stop loss of 2 pips and we'll have a take profit of 10 pips. So as you can see, the risk to reward ratio is 5. So essentially what we have here means I can take 5 losing trades, okay, but all I need to do is have 1 winning trade, and that will cover the 5 losses I have. So so you can be essentially profitable even with a 50% or 40% winning strategy, as long as you have a good money management plan. So in the case of binary options, we're dealing with an 80, maybe an 80% payback. So we're just going to currently work that out as to what it could be. So with binary, we're looking at a larger risk to a reward which will be less than the amount you've invested in. Okay, so this is just giving an idea of what the average risk to reward ratio for binary is. Obviously the percentages change. Sometimes they go up to 88%, so it can go up like this. But obviously it doesn't look good now, but the reason you would be trading this would be to get a high return. Whereas Forex, you might be waiting maybe a day or so to get the same returns you can get in binary in 60 seconds, okay? So moving on swiftly, we're going to be talking about the actual money management plan, and I'm going to enter this trade here so you can see how we do it. So I'm going to start with 100. Okay, we're going to enter the trade on the AUD USD. As I mentioned, why I'd enter the trade, the stock, RSI, stochastic indicators below 20. Okay, the candles come out the Bollinger Band, a new candles form just down here on support, so it's obviously hit some sort of support down here. And now the candle is making its way back through the Bollinger Band, so that gives us the indication that the market's just going to pull back slightly before possibly pulling down again. But as you can see, as I mentioned in the other videos, we're looking at the market sentiment, and the market's sentiment here tells us that the market's in an uptrend. Okay, so in this current picture here, so this would be an ideal trade for us because we're in an uptrend. We're taking a buy at the bottom of this market here, so the chances of it going up is extremely likely. So to actually show you how to do it, hopefully we're going to have to watch and see what happens here, and then I can actually show you how this money management plan would work. Okay, so whilst we wait for this to finish, I'm going to wait again before I re-enter the market because 100% is going to come back up. Okay, there we go. We're just going to double check it on this one here. Okay, so we've won this one. Now, using the money management plan, which I will talk about in a second, this trade's going to win here. So what we do, the profit we've made, we've got 174 back. So as we're only risking 100, we now risk 174. We use the cheeky tactic, which I showed you previously, to get the best entry in the market. There we go. So we've gotten in this price here. So we've gotten in at 0.77062. Now talking about the money management plan here, I'm basing mine off 100, but obviously you'll be doing it off a minimum amount so you can get the hang of it and see how it works. So what we want to be doing is investing the minimum amount. When the trade wins, you'll get 42 back. You reinvest the 42 back in. You'll get 71 back, and you reinvest the 71 pounds or dollars back in, and that will return you $121. Okay, and if you think about this, you've only risked $25. Okay, so you want to do this 3 times. Once you've done it 3 times, you take your profits and you start back at 25 again. Now this gives us the leverage to essentially lose 5 trades because we've just made this money here. We're allowed to lose at least 5 trades before we break even again, okay? So we're going to go back here. We're going to see how the market's doing. Obviously it's not going in our favor. So what we're going to do, using a money management strategy, When a trade fails, we restart back at our original starting price. So I'm going to go back to 100. And we wait 84, 85, 86, 87. And we'll see how this performs. So no, it's not going up. So what we do, we restart back at 100. So we're not risking any more money. We're just risking our original amount. So as you can see, I'm currently down 100. So I'm only down 100. I'm not down 174 because I've made the 74. Okay, so it's broken even. And now wait for this trade to come in. We'll talk about this again. So once you've done your 3 trades, what you want to do is take your money, restart back at the minimum amount and build it up again. So if you get another 3 trades in a row, great, because then that means you get 1, 2, 3, take the profits, start back at 25. 1, 2, 3, take the profits, start back at 25. Maybe you might make it to the second one. The only reason we're not going all the way down here, obviously you could risk 25 and get 352 back, but the likelihood of winning and the percentage, the chances of winning will go down the more trades that you take. Okay, so it's just like the lottery. The more numbers you pick, that you have to pick, the less likely that you are to win. Okay, same thing. It's gambling. Okay, so what we do is a really good money management strategy. So I'm going to follow through on this strategy, and as you can see previously, this markets has used the 20 period moving average that we have down here as support. So it's an indication to me that this market's going to continue its direction upwards. So now risk 174 again. The market's going to continue its direction up to at least the 20 period moving average before it then decides to take a reversal, or it could break through and make its way to the upper Bollinger Band. Okay, so I've covered this strategy previously. Insufficient balance, incredible. What's happened there? Oh, so it won't let me do it. Okay, that works out better for us. We're getting a better price. Let's refresh this to make sure nothing's gone on here. Okay, so what we do, we're just still waiting for this to get up to the 20 period moving average. Unfortunately, I tried to enter 17,000 by mistake, but my account's limited because I haven't got the premium account. I can't be bothered to get that. So we're just going to wait for this trade to come through. Okay. So there is a bit of a lag between, it's not stop pair which is slow, it's trading view which is slow, which is just, we can't really do anything about it. It's either the servers or a lot of people online. If it was the other way around, if that was the case, then obviously we would be making a lot of money because then we'd know where the market's moving in advance. So I'll run back through it. I've risked 100. I made £74 profit. I then risked 174. I lost 174. I'll go back to risking 100. I make £74 profit. So then I redo 174 because I'm including my profit on my original starting amount. Now, in terms of how much you want to be risking, personally, I recommend you risk 5 to 10% of your account balance because minimum amounts after you've deposited is about 5% anyway. So there we go. AUD's made its way up. We're expecting it to actually touch the moving average. So I'll wait for it to push up just a tiny bit more before we start shorting this. So we've had a profit. So payouts 302. So now we're going to do that again. It's going to go down and we're going to say exactly how much it says there. So 302.76, and it's not letting us do it. 302.76. Okay, so we're going to wait for the candle to form. We're going to see what happens. New candles forming already, so I'm reloading the page just so I can see what's going on. And okay, so now we have a bearish candle start to make an appearance. If this candle closes just below the 20 period moving average, that will give us an indication that the market's going to start to reverse back down. If it closes above the 20 period moving average, it's going to give us the the indication that the market's going to continue moving upwards. So at this current moment in time, if this candle forms like this, then I believe it's going to move upwards. If it's going to break down and form just below, it's going to move down. So that's why I always say to everyone, just wait. Okay, so now, because we have an indication it could go down, we can get in early on the trade by entering. It's not moving, so we're going to cancel it. I'm going to see what happens. Okay, so we're going to have, there we go, so we can decide to take a trade going in the upside direction, so it's going to be a call. Okay, so we've decided to take a call on this trade here. We're waiting for the candles to obviously form. We've risked, amount was 302 to get the payout of 526. So essentially what I started with was 100, and now I've changed that to 526. So it's essentially a risk to reward ratio of 5-to-1. So I'm risking 100 to get 500 back. Or if you look at it in other terms, it would be 4-to-1, because I'm obviously getting 4 times the amount back plus my original investment, which was 100. And 4-to-1 when you're trading you're only trading 3 times and you're investing your profits is not bad, to be honest. So there we go. So it's starting to rise. Okay, so it was a good decision to place a call. Just to go over it again, why I placed a call is because there was a bearish candle that would give the indication that there's going to be a sell, there's going to be a put. Market's going to move down slowly. There's a bit of selling pressure. But obviously we wait for the candle to form. The candle formed just above the 20-period moving average. The new candle was a engulfing candle. So it gave us the indication that the market's going to continue moving upwards and could potentially either move up to the upper Bollinger Band, or how the market over here came up and it pulled back down towards the 20-period moving average. And there we go. So we've taken so total we've taken 5 trades. We've risked 100. Okay, so I'm going to write this down for you so it's easy to understand. So I risked 100 to get 174 back, and then obviously I've risked that 174 again to get 302 back, and then I've risked that 302 to get 526. Okay, so and obviously, as you can see, that was only risking 100.